Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back, you're watching Traders Corner, and as always I'm joined by Garth McKenzie, who is of course the founder and editor of Traders Corner. Garth, welcome.
Hi Julieta.
Garth, tonight we're talking about everything that's relative to everything else, in other words looking at the various sectors of the JSE compared to other sectors of the JSE. So maybe just start us off with why one is going to be talking FINI versus Indy versus Resi, for example, this evening.
Yeah, that's right. We're looking at relative sector performances against all the major sectors. So we're talking resources sector, industrial sector, financial sector, and looking at the relatives against each other. You know, for the last few years, it's been quite simple. You wanted to be long of the industrial sector, and that was that. And the market was very strong in that sector. Resources were underperforming. Financials have done relatively well, but they've performed more or less in line with the broader all-share index. Now what's quite interesting is we're actually starting to see what I think is quite a significant shift in that whole dynamic, and the leadership of the JSE looks like it is starting to shift in favor of the resources sector. It's early days yet, but if we look at these relative sector charts that I'm going to show you now, it certainly does look as if there's fairly convincing evidence to me that we're actually starting to see that whole dynamic shifting now.
Well, I know that you want to bring up the major indices versus the all-share, so you're going to start off with the Industrial 25 Index, where, as you say, all the action has really happened over the last couple of years.
Yeah, it has. So I mean,
until recently.
Yeah, the sector that's up on the screen at the moment now is this is now the Industrial 25 Index versus the All-Share Index. Now, just to explain to the viewers how we arrive at this chart, it's a relative chart. So what we do is we take the value of the historic values of the Industrial 25 Index, and then we divide those historical values by the corresponding historical values of the All-Share Index to get a relative chart. So all we're really interested in here is the shape of the graph. Don't worry about the numbers on the left and right of the graph because they're actually quite meaningless. This is a relative sector chart. It's just to stress that point. It's not the industrial sector itself. It's a relative of the industrials versus the all-share index. All right, so having got that out of the way, that's the chart at the moment as we see it. Now, what's quite interesting to note is that you'll see this goes back to beginning of 2012, which is the last 2 years really. But I mean, if you went back further, you would notice there was outperformance of the industrial sector over the all-share index for the last 4 years. Now, quite interesting, note there that we've actually broken that upward trend on the industrial index relative to the all-share index. What that means to me is that this outperformance that we've seen by the industrial index now looks like it's actually giving way. And at the best, I see a sideways channel over there at the moment, which suggests to me that the industrial index is now performing in a neutral fashion relative to the all-share index. So it's no longer outperforming. And we need to watch this chart very, very carefully in the weeks and months ahead to see whether it continues to track sideways or whether we're actually putting in a big topping formation there and we start to make lower lows. But for the moment, as it stands, I would say that to me it's giving a neutral reading.
Well, certainly, you know, if you look at some of the components of the Industrial 25, shares like ShopRite, with the kind of results that they came out with today and the kind of outlook that they have, you know, one can't expect great things from these companies per se, except those maybe that have an offshore.
Yeah, well, that's the thing. So the sector is rather fractured, and you've got stocks like Naspers in there, which is shooting the lights out. And then you've also got stocks like the retailers, which are really looking pretty weak. So you've got a fairly, you know, within the sector, there's quite a lot of divergence there as well. But I think looking at it overall, the Industrial 25 sector to me looks like it's gone neutral in our market. It's no longer outperforming the all-share index at the moment.
What about the FINI 15, which is the top 15 financial shares? And you said its kind of performance has been, you know, it has kind of tracked the all-share over the last couple of years. Yeah,
for the last couple of years it has. Again, here we're looking back 2 years, 2 or 3 years actually. What's quite interesting to note here is that notice this big head and shoulders pattern that we've got on the financial index relative to the all-share index. And we've actually broken down below the neckline of that pattern, and we're starting to consolidate beneath that neckline now. Now that potentially is actually quite a bearish setup, and it could quite conceivably point to further underperformance by the financial sector. And it's very possible that we actually go back to those prior pivot lows that we saw in 2011. And so to me, this points to further underperformance by the financial sector of the market at the moment.
And then what about resources, where finally things seem to have to have changed or turned?
So here's the resource sector. Now, obviously, you can see this has been a rather disappointing picture for the last couple of years.
That's putting it mildly.
But it has. But what's interesting, note we've broken that shortest term. When I say shortest term, I mean that's actually a 2-year period that I'm looking at there, where I've drawn in that downtrend. We've broken that downtrend. What's also interesting to note for me is that we seem to have put in a fairly large base here on a relative basis. And we've actually now, for the first time in many years, we've actually started to make a new relative high. And we're going to now start to look and see whether we don't start to make, higher highs and higher lows on this relative chart. But certainly to me, that does start to get me interested. And it does look from a relative perspective like we're seeing the money shifting from the domestic sectors of our market towards the resources sector. And now the big debate and the big question is, will this theme continue? Are we seeing the emergence of a new theme here where the resources are going to take the leadership role on the JSE?
Okay, so the new sector leader. I mean, it might not happen because a lot of the, I suppose, the big rand hedges are not necessarily all resources counters, and those are certainly the ones that have picked us up over the last couple of months. Yeah. But do you think, if you're talking about a shift in leadership, this is what we're experiencing?
Well, it looks that way. As I say, it's very early days yet. And what I want to look at now is look at the actual indices themselves. So these charts that we've looked at have been relative charts. What I want to now look at is actually, or first of all, that just basically shows us the preference. So we've got resources number one, followed by industrials, followed by financials, in order of preference. But if we now start to actually look at the indices themselves, this is now a chart of the resources 10 index. And what's quite interesting to note here is that we had this big area of overhead resistance, which was at 54,000 on the resource index. Now, quite interestingly, this is now looking back over the past year and a bit. That's a formation that we haven't really covered on this show before, but it's called a cup and handle pattern. Sort of like a inverted head and shoulders, but it's missing the one shoulder. So we call that a cup and handle. Now that's quite a bullish pattern. And the fact that we've actually broken above that you call it the rim of the cup, or it's like a neckline of an inverted head and shoulders pattern, that's quite a bullish setup. And it does certainly point to the fact that we could have further gains to be seen out of this resources index. What I would look for right now is some sort of a consolidation from where we are right now. We've had a very strong run in resources shares over the last few weeks. We're very overbought in the sector. But I think that breakout is definitely valid, and it does certainly point to further upside in the resources sector. So I think if we start to see consolidation here, this could potentially line up a bias signal for some of our resource stocks.
And then if you look at the industrial index directly?
Yeah, so here's the price of the industrial index itself. Notice that uptrend that's been intact for 2 years or so has actually broken to the downside, and we seem to be now hugging the underside of that previous uptrend. What's notable here is that the potential formation of a head and shoulders pattern, and these often are a top, so you can see the left shoulder, the head, and then a potential forming of a right shoulder at the moment. It's still early days yet, but in a fairly strong market, the industrial sector hasn't managed to make a new high, which is a warning sign for me.
And the financials, Garth, especially with the potential of another interest rate hike down the line.
The cycle looks like it's turned. We've seen this beginning of a tightening cycle. Well, here we've got the financial index, and what you can see happening there looks to me to be like a broadening formation. It's that type of broadening formation can sometimes symbolize a top as well. And I think what we need to do is look out for any resistance up towards the upper end of this broadening formation here. If we start to fail there and turn lower, then the potential is that we could still come down a bit. So I think by and large, these are telling us that we need to just be cautious in the financial and industrial sectors. Resources do look as if they're starting to take the lead. But taking that exercise one step further. All right. I mean, previously we looked at relatives of all those major indices versus the all-share index as our constant. But what if we were to take resources and look at them against the other two sectors? So we're going to look here at resources versus financial versus industrials, and then followed by financials after that. So here we have resources versus the industrial sector. That to me looks like a very big source of bottom that we've been having form over the last 9 months over there. And what's quite interesting is that we've actually started to take out this lateral resistance on that relative chart, and we now seem to be consolidating above that lateral resistance. So what I would look for now is some further potential consolidation here as a possibility to look at buying resources relative to industrials. And if we look at the financials, so we're talking now resources versus financials, the picture is fairly similar. Again, we've got this large saucer bottom that's happened over the last 9 months or so, and we've actually for the first time now started to make a higher high on this relative chart. So all of this really points to me to the fact that we appear to be seeing the leadership on the JSE shifting in favor of the resources and at the expense of the financials and industrial sectors. And something I'm going to be very keen to keep an eye on in the week ahead and to potentially look to institute a trade on would be a medium-term trade whereby we go long of CFDs on the Satrix Resi and short of the corresponding number of CFDs of the Satrix Fini and Satrix Indy. And we would do that in what we call a pairs trade. And that's something I'm certainly going to be very interested to possibly look to institute in the week ahead now.
Guys, just on what's been happening out there at the moment, it seems as if the market is really all over the place. It's very hard to get a sense of any kind of direction. I mean, one night, last night you had the S&P touching, new all-time highs, and then suddenly there's quite substantial and sustained weakness in our own market today, and everything's come off quite strongly, and you've got a stronger rand all of a sudden. So it just feels from one day to the next, one doesn't really know what's actually going on.
It is very choppy at the moment, but remember, we also did allude to it right in the beginning of the year. We said we expect this year to be quite choppy and difficult, and that certainly seems to be the way it's playing out. I've found the month of February to be very difficult to trade personally. I haven't done very well this month for myself, and I think that also what is noticeable is certainly throughout 2014 to date is this situation of transition in our market, which is clearly evident on these charts. And it is quite difficult when you're in that transition phase to actually pick your sectors right.
Yes.
I'm a big believer in getting the sector right. I think if you can get the sector right for your trading, then you've got part of the battle won. But it's been difficult to actually know which is the right sector to be in.
Well, exactly. I mean, it's only once you've actually pulled up those relative graphs that you actually get a sense of what's happening, because when you're in it, you don't really know from one day to the next. I mean, you talk about resources maybe becoming the sector leader. Today, a lot of the key resources shares, and in fact yesterday, have come up quite sharply. So, is it happening or isn't it? And it's quite hard to tell.
I think we due a bit of a consolidation in the resources sector. They've run very hard, but I still think that breakout that I showed on the resource sector itself is definitely valid. Any pullback, any consolidation in resources from here, I think could line up a nice buying opportunity. But again, relative to the financials and industrials, I think that we've got a whole shift happening in the sector leadership in the JSE at the moment.
Garth, I'm not going to ask you too much about pairs trades, etc. As you say, you're not putting on any trades for the portfolio this week, something that you would consider for next week. But just on the use of saucers, cups and handles, I've sort of put in mind of having a nice cup of tea now. But these are quite interesting charts that you haven't actually ever used before. I mean, they're quite subtle, I feel. It's quite hard to sort of ascertain whether that is a saucer formation. I mean, what sort of points you towards it?
Well, I think the fact that that's been forming over a 9-month period now.
So are they long-term formations?
They generally are fairly long-term formations. I think the reason we haven't seen them much on this show, and particularly in this context, is because for the last 4 years, since we've been doing this show, the industrial sector has been in a very, very undeniable, strong uptrend.
Yeah.
And only now we're starting to actually see things shift. So, when you see that big base forming, then you can start talking about saucer bottoms and things. We haven't really had an opportunity to do that on the show, certainly not in this context, since the show started actually in 2009.
So that's quite curious. So, yes. Garth, what does the portfolio look like then, seeing as you haven't put any new trades on in the last week?
Yeah, because I haven't done anything different, it's actually identical to last week. So we're still at 15.5%. We're keeping our capital very much intact, which is a good place to be at the moment in a fairly choppy market. I'm happy to be sitting and protecting our capital, but I will be looking possibly at a pairs trade like I discussed between the domestic sectors and the resources in the week ahead now.
And then to end off with upcoming courses.
Yeah.
And you had one this last weekend.
I did. I was down in Cape Town on Saturday. Lovely course, good people, good weather. So it was lovely. I'm still very busy in the coming weeks. We've got in Durban on the 8th of March. I'm presenting a high probability trading course there. I've also set another date in Johannesburg for the 29th of March. I've got a face-to-face session coming up this week Thursday, the 27th of February, and I'll be discussing this whole scenario of this shifting sector leadership on the JSE. If you'd like to attend that, you're welcome. And then I've got a Understanding CFDs course next week, Thursday, on the 6th of March. So if you're interested in attending any of these functions, please email me, garth@traderscorner.co.za, and then I'll send you all the details.
Great, Garth, we'll leave it there. Thanks as always for joining us on the show.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.